Hi, Steve, and thanks for joining us today on Focus on Retirement. Looking forward to hearing more about reverse mortgages. But first, tell us a little bit about yourself.
Oh, well, Fred, first and foremost, I'm delighted to be here. Thank you for inviting me. As you can probably hear, I'm originally from somewhere else. I'm from the UK originally. I've been in Canada since 2006, but actually with one of Canada's leading financial services companies or banks since 1993. I spent 24 years with RBC. Before finding my home at Home Equity Bank, no pun intended there. And my role with Home Equity Bank is to help seniors or the better generation live the best retirement they can.
The better generation, that's great. And your English is really coming along. So you're sounding more Canadian every day. So let's start with the obvious question. What is a reverse mortgage and who is eligible for reverse mortgages?
Okay, yeah, I mean, it's a great starting question. It's not unlike a conventional mortgage. A reverse mortgage is a loan that is secured against your home. The significant difference is there's no income qualification required and no monthly repayments unless you want to. You have the option to, but they're not required. Who's it available to? Anyone over the age of 55. If they're a couple, they both must be over the age of 55.
Okay.
And it provides a way to access the value in their home so that they can continue to live in the home for as long as they want to live in it.
Right. So stay in place is a big ticket now with healthcare and concerns. So, and many people would rather stay in their home, and home equity, a chip mortgage may be the way to make it that much more affordable. So now, will the bank ever own the home?
No, that's a common misconception. People think, well, the bank take over my home. No, the bank doesn't. It's a conventional mortgage from that sense. It's simply secured against it. The homeowner retains title and maintains ownership of the home. All that we require for servicing the loan is that they remain in the home, is one. Secondly, they pay their property taxes. And thirdly, that they insure the home. And of course, keep it in good order, but we're going to assume people do that anyway because it's for their enjoyment.
Right.
But
So the maintenance, you have
otherwise,
to look after the maintenance, pay your property taxes, pay your insurance. The only thing you don't have to pay is you don't have to pay, like in a line of credit, you don't have to pay the money back. So you don't have that.
correct,
Right. Okay.
correct.
So
You don't
will the
repay the
homeowner
mortgage.
I'm sorry?
I was just going to say, you don't repay the mortgage until you choose to leave the home. And it's
Right.
not just one couple. It's not just one of the couple. It's until both leave the home. So if one was to pass and the other says, well, I still want to live in my home, they get to still live in the home. The mortgage is written a bit like an insurance policy on a joint last to die.
Right. Yeah, it makes sense. So I think reverse mortgages in the past, when interest rates were so high that the values were, the value of the mortgage to the bank was exceeding the house over a shorter period of time. But interest rates now are so much more favorable in all areas, consumer loans and mortgages, that it might be worth taking another look at the reverse mortgage. So, but will the homeowner ever owe more than the house is worth?
We actually have a guarantee that you can never owe more than the house is worth. And we've been doing this since 1986, so that's quite a long time. You mentioned Teachers Pension Plan, Ontario Teachers Pension Plan has just acquired the business. They've done investigations and studies into reverse mortgages and clearly feel this is a growth area, particularly looking at Canada's demographic, where the over 55s are the fastest growing demographic in Canada. So in simple terms, they can never own more than their house. 99% of homeowners have never left their home without having some balance left, either to sell it if they move into a care home of some sort, or whether, you know, it's the estate that deals with it. 99% always have something left in the home. And if they don't, that is our problem, because we guarantee they can never owe more than their home. It's another critical difference with reverse mortgages against some other credit products, is it is actually what is known as non-recourse. Any of your listeners with Florida properties will be familiar with non-recourse mortgages. The only recourse we have is to the value of the home. So if the value of the home is less than the loan, that's our problem.
Right. Well, you mentioned we both mentioned the Ontario pension teachers pension plan, the purchase, but you also have some pretty good endorsements from CARP and from the Royal Canadian Legion as well. That's my understanding.
Absolutely. You know, we're an organization designed to help and serve seniors.
Right. So back to, is a home equity line of credit, what they call the HELOC, would it be a better option as interest rates are lower? So if I'm looking to borrow against my house, I can do it, for example, through that home equity line of credit, which I have to pay back. So I have to make monthly payments, but interest rates are pretty low now. So why wouldn't I just get a line of credit against the house?
You know, I think a HELOC or a general line of credit is certainly part of the conversation. And I would never suggest to someone like you're wasting your time looking at that, because they're definitely part of the conversation. However, there's two or three critical differences. First, a HELOC or even a line of credit requires income qualification. And a lot of seniors don't qualify with the income. So therefore, a HELOC is taken off the table. If it is on the table, then yes, interest rates are slightly lower. You may get a HELOC now for around 2, maybe 2.25, where our variable rate is slightly over 4. So there's a little bit of difference there. But here's the other critical difference. The HELOC rate may move if interest rates go up.
Right.
And now the other critical difference is you're having to service the loan. So you're having to pay interest on whatever you take. So now you've taken some money, you're servicing the loan, but interest rates start to rise. So the costs of your servicing start to rise. With a home equity loan, because you are never going to, with the chip reverse mortgage, because you don't have to make repayments, it will never impact your cash flow.
Okay. Yeah, interesting. Now, what if the homeowners have an existing mortgage or a line of credit now on the home? Can we still access or take a look at a reverse mortgage and see if that could benefit them?
Absolutely. It's very, very common, Fred, for many of our clients when they come to us have an existing line of credit, and quite often it's servicing that line of credit which is causing them an issue with their cash flow, and quite frankly, you know, they've got all this money tied up in real estate that they just can't access, and so that's where the reverse mortgage comes into the conversation, because it will enable them to access that value. It means no more repayments are required to service the debt, which obviously substantially improves that cash flow in retirement. They can live the retirement they want to live, as opposed to having to worry about servicing the debt on a HELOC. We simply take the HELOC and pay it off with the proceeds of the reverse mortgage.
Right. And cash flow is king, of course, in retirement. I mean, income is king. It doesn't really matter. I mean, well, it does matter to a certain point how much, you know, assets, how much value and asset you have. But if you have an asset that you can't access, like your home, that easily, or you have assets that are going up and down with the market, it has a real impact on your income. So what we look for at Bowie Financial is to, you know, establish some good, solid guaranteed, protected lifetime income, which, revisiting the reverse mortgage is a real education as well. And I'm going to encourage people to at least take a look and see if it would fit into their income planning, because income is king. And market crashes come and they go, but they come. If they come at the wrong time for you, well, too bad, so sad. You're going to lose that money. You lend money out to kids, you're going to lose that, so on and so forth. So there's lots to go. But should reverse mortgages only be considered a loan as a last resort?
Not at all. And I think, Fred, you just beautifully explained, a number of things that can happen and that can impact your life. But what we're seeing in the marketplace, I represent the wealth management group of Home Equity Bank, and we're seeing many financial and wealth managers using this as a tool, as a financial planning tool for the betterment of their clients. So we're seeing people purchase second properties. So in retirement, they want a cottage. How do we afford a cottage? Well, we've got this really big home in Ottawa or in Toronto or in some other big conurbation, and they can use the proceeds of that to buy a cottage without impacting their lifestyle, because they're not having to make repayments. But actually what they've done is they've got two properties, and sometimes it's simple cash flow. They just want cash flow, and they'll use it to defer CPP. Deferring CPP is a great idea if you can afford to do it.
Well, 7.2% per year.
Absolutely. Take cash-free proceeds from the house to defer CPP, and you're getting 7.2% growth. That's what a guarantee. Others want to do it for an investment purpose. We do have clients that come to us with 3 properties, and we can do what we call a blanket. So providing one of them is their main residence, we can include a portion of those other properties. So someone who already has the cottage has maybe a condominium somewhere that they got for the kids when they were at university, and has their main home. And they simply say, well, I've got 80-90% of my wealth tied up in real estate. I want cash flow. It's a great opportunity to do it.
Right. And can you include foreign real estate?
Unfortunately, you can't.
No.
But you can purchase a Florida condo from the proceeds of your CHIP reverse mortgage from your Canadian property.
Right. Well, it really sounds interesting. I think that reverse mortgages, that it's not improper to consider them today. It really isn't. It's tax-free income, income that you're guaranteed to get. And, it's interesting. So I would encourage people to take a look at it if it kind of fits in their parameters for income purposes. And so it sounds like reverse mortgages have become, really, really flexible, a real flexible planning tool. So what should our viewers do if they have further questions or would like to investigate taking on a reverse mortgage?
Well, I would say the first thing they should do is reach out to you, Fred, and have a conversation with you. And of course, you can introduce them to me, and I'm more than happy to have a conversation. I mean, I'll leave you with a quick story. Back in 2014, 2015, I was working with a major finance institution, and I was asked to help a client. We helped the client move some money from down south to here. We wrapped it in an investment portfolio and put it in the trust for him because that's what he needed to do. Very successfully done. Client was very happy. But afterwards, I had a conversation with the investment advisor who said, the real shame about this is that, we've secured his income here, and that's great because now I can deliver him the income that he wants. And he's got this beautiful home that's worth $3.5 million in one of the nicer parts of Toronto. So the only problem is, he says, there's holes in the roof. The bathrooms haven't been refurbished for 30 plus years. And, he can't afford to get the help, a PSW, to come in and help him. to clean up and do a bit of cooking, and he really needs that. He was 93. There was 5 advisors on that file, and not one of us said, why doesn't he consider a reverse mortgage?
Right.
Using the 3.5 million, it would have improved his life, but none of us knew about it. And that's one reason why I joined Home Equity Bank, because I thought of that old man every single day since I met him, because he was the loveliest old guy that you could wish for. But we let him down because we didn't know and didn't understand. And that's why I want to applaud you for taking another look at reverse mortgages. And the great thing is, with Ontario Teachers Pension Plan, they're really going to become mainstream.
Right. Okay. Well, that's great. I mean, I really enjoyed. We learned a little bit more about reverse mortgages today, and there is the CHIP Reverse Mortgage Guide that's available. I think we can get it through our office, and we have a few copies of a book too on reverse mortgages. If viewers want to learn more, Home Run, the Reverse Mortgage Advantage. I think we have about 20 copies of these available. So if anybody watching would like to get a copy, they can just shoot me an email, fred@bowiecanhelp.com. So Steve, I want to thank you today for taking the time out to come and visit us and with a few viewers here. And, those who want to learn more about the reverse mortgage, we're happy to discuss it and go forward with that to see if it fits into their retirement income planning, especially on the protected retirement income side of things. Absolutely. So take care and have a great day, Steve.
Thank you very much for having me.
You're welcome.